Investors are piling into Chinese chip, software and biotech groups at a record pace, while paring their bets on e-commerce, as they try to align with Beijing's policy priorities and sidestep a broadening regulatory crackdown. Chinese President Xi Jinping has led a regulatory assault on internet platforms this year, hitting those in food delivery, e-commerce, fintech, gaming and education. But the Chinese Communist Party's desire to advance technologies, such as high-end manufacturing, has boosted other companies. China's semiconductor sector has been supported by a multibillion-dollar government plan, partly to counter U.S. determination to stifle its technology industry. Beijing wants the country to make 70% of its semiconductors domestically by 2025, up from a third today. The value of venture capital investment into Chinese semiconductor companies increased 446% in the second quarter compared with the first, to a record $8.9 billion, according to data from Preqin. In one deal, Chinese manufacturing group BYD Semiconductor raised 1.9 billion renminbi, $293 million, in a Series A round from investors including Sequoia China in May. For China, the most important areas of technology include semiconductors, aviation and life sciences. When President Xi talks about the importance of technology, he has expressly elevated the manufacturing industry over digital goods, said Dan Wang, a Shanghai-based technology analyst at Gavekal Dragonomics. Beijing has also encouraged investment in artificial intelligence. WeRide, an autonomous driving startup, raised $310 million from investors including the Renault-Nissan-Mitsubishi alliance in June. In contrast, investments in Chinese fintech companies fell 36% to $360 million in the second quarter compared with the previous one, according to Preqin. The sector has been subject to a crackdown since regulators pulled the $37 billion initial public offering of Jack Ma's and Group at the last minute in November. Meanwhile, investments in gaming and e-commerce companies dropped 96% and 54% to $121 million and $4 billion, respectively, in the second quarter. Groups that operate in these spaces, such as Tencent and Meituan, have also been targeted by Chinese regulators this year. The co-founder of one big Silicon Valley venture capital investor with a large China fund said it still planned to invest in the country, but only in biotechnology, software and other sectors deemed as safe. There were 74 fundraising deals in the chip space in the second quarter and 133 for software companies, according to Refinitiv, another data provider.